Welcome back, guys, to the second video in this trading lesson series, where we're going to talk to you a bit about price action pin bar signals forming at key levels in the market. So we're actually going to carry on using the chart that we were talking about in the first part of this series, and we're going to expand on that pin bar that we circled and discussed in our trading commentary on the website a little bit for you now. So actually I'm just going to zoom in on that part of the chart. So just give me 1 minute. Apologies for the fact that it's a little bit pixelated there. So this is the signal that we discussed in the last video, and this really here, this circled candlestick there, that's what we call a pin bar. We actually define what a pin bar is on the website under the strategy page, where we've published our trading strategy for you. So this is actually the only price action signal that we trade. We're not wasting our time with things like outside bars, inside bars and things like that. You know, we analyse a big stock market portfolio of 500 different companies. We don't need to be messing about with low probability signals. These are really the highest probability signals you're going to get, to be honest with you. So we're not wasting our time with anything else. You know, we're getting at least one of these a day, maybe 2 or 3. So that's all we care about. So when we talk about price action signals from key levels, we've obviously taught you how to plot the key levels, and these are the signals we're talking about. So there's a few more of them. If I just circle some to give you an idea, there's another pin bar there, there's another pin bar there, there's a pin bar down the bottom here, got one up the top there. You know, there's lots of these. They're forming all over the place on the chart. Okay, but the important thing, as we said in the last video, is to actually be trading them at the right place in the chart. Okay, and they're characterised by the fact that there's a big wick that sticks out and a very small body. Okay, I think that's clear from all of these. Sorry, I didn't explain that, but you know, I think that's clear. But what you can see, you know, straight away from what I've plotted on the chart here, is that some are successful and some aren't. Okay, and really, the way you can tell which one's going to be successful and which aren't is by where they form on the chart, and they need to be forming at these key levels that we've drawn. These at the top here are actually a good example of some failed signals. You know, everything doesn't always work out in the market. These did form above that key level that we've drawn, and price subsequently sold off. So you're not, you know, they're not always going to work out. You're not always going to win, but hopefully over a long period of time, trading them properly with a good risk-reward ratio, which we'll talk to you about in a minute, really will pay off. So let's just, you know, delete some of these circles, and then we'll talk about that signal that formed a couple of days ago and that we talked about in the commentary. We'll leave that there. Okay, so what we kind of have seen happening here is actually price shot up, you know, here, as we talked about, bounced around above that support level for about a month, and then in 2 days, look at that massive sell-off in 2 days as price broke below this support and resistance level, and you know, lots of sellers entered the market. Subsequently, there's a bit of a bounce, perhaps as people start to take their profit. Profit taking can result in what we call a retracement. Retracements are kind of this sort of pattern in the market, so a big move down, a small move up, and then a continuation usually is what we'll see after a small retracement. So that's what we've had there, and what we're looking for here is the price action signal to form at a key level on a bit of a retracement. So we actually had a signal there, Now that's not one we would have taken, because that's actually above this support level, and we see that as a barrier to to a further continuation of this downtrend. So we actually let that one go. We didn't take that signal, waited patiently, and actually our patience has paid off, because what's happened is price bounced around for a little bit. It actually closed here below that support level, and then the following day it's dropped this beautiful pin bar here just below that level, and that's really telling us now that this level's broken as well, and indicating that lower prices are probably in store. So now we've got that signal that we're happy to trade. We know it's in a good place in the chart because of our key levels that we drew on in the first lesson, and we know that it's a good sell signal and it's well formed. How are we going to trade it? Okay, that's the next question. And basically the way we trade this signal is we'd look to place a trade at market open the following day with our stop loss just above the high of the pin. So what would that look like? That would look a little bit like this, where we'd enter probably here. So we'd place a sell order there. Our stop loss would be, let's say, here. And then we place our profit target. As we discussed in our strategy section, our profit target would be 2 times our risk. So our risk on this trade is defined by the distance from our open to our stop loss. So it's about that far there, and that's the amount of money obviously we're risking on that trade, and so our reward needs to be 2 times our risk. So our reward is going to be on this trade somewhere down here. This is kind of pretty rough, but that's the kind of thing we're looking at. And then we're holding our trade out for a risk reward ratio of 2 to 1. What that means is we're actually letting our winners run on whilst our, sorry about that, running on low battery. What that actually means is we're letting our winners run and cutting our losers short. So, and as you can see, there's plenty of room for 1 to 2 risk reward ratio before we run into this support down the bottom here. So that's about it for this lesson, guys. That gives you a bit of an insight into why we would take that trade, how we would enter stock placement and target. So in the next lesson we'll talk to you a bit about the importance of actually trading a 1 to 2 risk reward ratio and not sort of going for 1 to 3, 1 to 1, and how we decide on that ratio, because it is very key to success in the market. So we'll see you in the next lesson. Thanks for listening, and good trading.